Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this Thursday edition, August 18, 2022. As you can see, please be sure to subscribe to this channel for the latest financial news in the U.S. and sometimes abroad. And I thank you for your support. Today, we're going to be talking about the retail sales numbers and the inflation, as well as the recession preparations that many are making by buying extra goods every time they go to the store, or to other places as well. So retail sales, according to CNBC, little changed in July amid falling in gas prices and drop in auto sales. So gas went down a few cents, as you know, last month. Nothing crazy, but food prices still remain elevated, and the food went up a few cents, or even more than that, 10 cents or more. Every time we go to the grocery store, the prices continue to rise. And now CNBC and other media outlets, Fox Business and Yahoo, they're reporting that retail sales are kind of flat, for July and August. Many people doesn't the discretionary income that many people have had, many Americans have had, has kind of flatlined and gone down, and so even auto sales have decreased. Used car prices are still up. I know a lot of my friends were looking for used cars abroad, and the prices are still elevated on these used cars. And many places they're asking you to trade in your car to get more money, but that doesn't make any sense if you have a low mileage car or a car with high mileage that you don't want. It still runs pretty good. You probably don't want to trade it in. So right now, we have a situation where retail activity continues to remain flatline. We know that malls have been dying for the last 15 years now. Outlet malls are taking over, and these kind of mixed-use development shops have taken over in a lot of the cities and suburbs across America. So that will continue to happen as investment. But you notice the pace of investment has slowed down, and the pace of housing, new construction has slowed down. The permitting has slowed down this month, as well as houses are staying longer on the market. Those looking to sell, it's becoming more of a buyer's market because the houses are staying longer on the market as well. So we have this conundrum here where we had two negative quarters of GDP, which technically is a recession. President Biden and his team doesn't want to call it that, and other economists don't want to call it that yet till they see what this third and fourth quarter is going to do. So they painted here in CNBC by saying this is a good week for inflation numbers, guys, but whether it can last is the big question, and that's a big question that we all have around here. Inflation is still at 8.5%. That's still high, guys. Inflation in Europe and the UK is at 10.1%. That's high and growing. They're already heading toward depression territory over in the UK and the Eurozone. And inflation everywhere is high. So now we know that according to what these gas prices are going to be going back up, as you can see this one in Maryland at 409 and 401, it's going to be continuing. It's going to be continuing to grow, and this is going to be a concerning thing for us because right now we have a situation where the inflation is continuing to grow, and the Federal Reserve Bank has another meeting in September, and basically the choice is they're going to raise it by 50 to 75 basis points again, the interest rates, but they can't do this forever. So the choice is either to continuing raising interest rates and hurt the U.S. economy, or just stop and leave interest rates unchanged and watch inflation continue and the consumer price index continue to rise above 10%. Right now it's at it's still up 8.5% from a year ago, and everything is surging. I don't have to tell you that. You don't have to be an economist to figure that out. Everything is surging between food, gas, utilities, transportation. I was on the road this past week, and even though gas is high, you see a bunch of trucks, semi trucks are still delivering. Everything is still growing, to these various places through the various interstates. However, that's going to be changing with the new regulations for trucking in California and other states that require you to have a cleaner burning engine truck. And as well as all the driver requirements now for getting the CDL and all the different licenses that they need to operate. And so the margins are running thin. And so that's going to be worrisome too. So the assumption is that a recession is inevitable, quote, but it has a few holes in it. That's according to this guy, opinion piece by Mr. Jim O'Neill and MarketWatch. Well, this is going to be a long-term event. Like I said, this is a sprint, not a marathon. This is going to be a depression, and it's going to go from hyperinflation to stagflation and then basically to deflation. But by the time we get to the deflationary prices that everybody's hoping for in housing, cars, retail stocks, no one will have any real money, liquidity to spend, because our liquidity is going to be tied up in either our retirement investments or in another type of investment, or the dollar is just going to be so worthless that people around the world are going to dump the dollar, and it's no longer going to become the world reserve's currency. And we're going to go to special drawing rights, and that's something you have to look up. It's called special SDR rights that they have between the International Monetary Fund when the world reserve currency becomes basically worthless. And so we're heading toward that. It's taking some time because, like I said, this is a $15 trillion economy we have here in the U.S. And so it's going to take some time, but we are heading toward recession territory. It's true that 2 negative consecutive quarters of GDP is taking that the economy is in recession. But the good news is we had more. This was giving us more time. The lifeboat, like the Titanic, it didn't sink immediately, but the holes started appearing, and slowly, floor by floor, it started to sink. And this is what we're seeing here. We're seeing that slow decline. And let me know what you're seeing in your area. I'm seeing a lot of commercial real estate vacant. I'm seeing a lot of homeowners have for sale signs out, but it's taking longer, 60 to 80 days to even get pending sales. A lot of open houses. People are trying to downsize into smaller places, either due to after retirement or before retirement. Going to states, people are moving to states where taxes and state income taxes and property taxes are lower. They're getting out of New York cities and places like that. DC, they're getting out of California. They're moving into the Midwest. I'm seeing that a lot around the country as I travel around the country. They're moving down south to Texas and those places like that. So let me know what you're seeing in your area. How has this hyperinflation affected you? It's affected all of us, whether middle class, upper class, every class is being affected by this hyperinflation that we're seeing. And so it's going to continue in 2022 and 2023. And so you want to be prepared. You want to stay tuned for the latest developments and to be prepared everywhere with basics, food, water security, and medicine preps, because that's going to be important as we travel and become more of a nomadic type of country. People are going to be moving around as there's no more sense of permanency now with a lot of Americans here, with a lot of us here. And so let me know what you see in your area. Be blessed today. We're heading toward the weekend as we careen toward the weekend, and next week I'll be bringing more updates related to the earnings reports that are coming out in the second, third quarter here, as well as back to school. Kids are going back to school. We're going to see how the spending from the colleges in a lot of these college towns, once the kids get into school and they get the refund checks coming up, if they got student loans in the next 2 months, probably around Halloween or just before Halloween, we're going to see how that impacts the economy, if they're spending it back into these stores or not. So, because I know Target reported that they had negative, didn't have a high growth earnings. So we're going to see how that is from the students as well. God bless the students who are returning to college, high school, elementary school, and everybody else as well. And God bless those who are returning home from deployments or services and all that stuff as well. So I'll talk to you very soon. Be blessed. Take care.